One of the first books that I read post my college days was Beating the Street. It's a very good read, my dear friends, and I'm going to summarize it for you. Now, Beating the Street is a book written by Peter Lynch. For people who don't know who's Peter Lynch is a legendary investor and former manager of the Fidelity Magellan Fund. Now, Peter Lynch managed the Fidelity Magellan Fund from 1977 to 1990, and he grew the assets from 18 million to 14 billion. Wow! Lynch beat the S&P index in 11 of those 13 years. Wow, what a guy! The book is a follow-up to Lynch's previous bestseller, One Up on Wall Street. If you guys get a chance, do read that as well. Beating the Street primarily focuses on investment philosophy, strategies, and insight. There are 6 key takeaways from the book. Number 1. Investment philosophy. Lynch's investment philosophy is very simple. He always wants to do a research to understand the businesses before he actually invests in those companies. He always kept that long-term perspective. Now, he and his team visited stores, talked to the customers and employees. He analyzed the financial statement and then make informed decisions. And Dunkin' Donuts is a great example of that. He visited a store a few times, cherished their donuts before an investment decision was actually made. And they say, rest is history. Number 2. Industry analysis. In the book, Lynch provides guidance on how to analyze the different industries and spot the investment opportunities. He shares his approach to evaluate companies within various sectors. Number 3. The common sense approach. One of the key takeaways from Lynch writing is his common sense approach on investing. Now, he asks investors to use their own observation on everyday experiences to find those gems for investment purposes. Number 4. The power of patience. Lynch has shared various successful examples throughout this book and asks investors to hold on to the successful investment for a long period of time and resist those temptations to sell during market fluctuations. Now, there will be peak and troughs in the market, as we all know. He advises having a plenty of patience and discipline in the stock market to achieve that investment success. Number 5. Investing in growth stock. Now, Lynch had this approach of investing in growth stocks, particularly with those compelling stories for future expansion. He asks his readers to invest in those early growth companies because that's where lies the substantial returns. Number 6. The art of selling. Lynch discusses to keep the stocks for decades before selling them off and emphasizes the importance of periodically reviewing your investments and reassessing the growth opportunities. My personal favorite moments from the book. Now, I have 3 personal best moments from the book. Number 1. Look for the long term when you invest. When I say long term, I would say 8 to 10 years. Number 2, don't follow the herd mentality. If someone else bought a few specific stocks, you should too. It's your hard-earned money. Invest it wisely. Number 3, look for the early stage growth companies because that's where you'll get higher returns. Now that was a complete summary of the book. Please like, subscribe, and share it with your friends.